What's up everybody? Welcome to the Stocks channel. My name is Cory and today we're going to do macro technical analysis and we'll be looking at all of the indices, the VIX and Bitcoin. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. And also just a reminder, we are looking at weekly charts today, so every candlestick will represent one entire week's worth of price action. Alright, so I am recording this intraday and you can see the SPX is currently at a brand new all-time high. Looking back at the year 2021, we can see that we did have a very strong bull rally, and it was definitely a year that a lot of people were panicking and worried about all kinds of noise in the stock market, yet we just continued to climb higher to new all-time highs. So if there's any message I can bring to you today, it's going to be if you were one of the people that were panic selling at the bottom and FOMOing in at the top at the year 2021, make sure that you do something differently for the year 2022. Don't go into next year doing the same exact mistakes that you had this year. And that's why I always try to teach you to stay objective and follow price action. If you look back at all of the noise we had in 2021 and you look at the stock market, how it just continued to go higher, if you blocked out the noise, you would have been much better off. Noise is just there to cause fear, panic, and uncertainty, and it does not help you become a better trader. The only thing that can help you become a better trader is open up the charts and follow price action and trend. That is what we do time and time again right here on the Stocks channel, and that is why we continue to crush this market. You don't want to go look at the latest news articles and try to figure out how to trade the stock market. They're completely unrelated, and even though a lot of people think news moves the stock market, try to explain to me why the stock market continues to go higher with all of the bad news that we've had going all the way back to 2020. You can try to blame something for any move in the stock market because there's always going to be a scapegoat. The only thing you can't deny is price action and trend, and right now we see the stock market continuing to push higher, which tells us the stock market is still bullish, and we should expect to see the stock market remain bullish until we see something objectively break down in the price or the trend. So zooming in on the trend right now, we can see the trend is only strengthening yet again, and we know the trend is strengthening because we can see separation in the moving averages. Price action is clearly bullish because we're at a brand new all-time high, and you can't get to a brand new all-time high without bullish price action. So we still have very critical support on our trend line right around SPX levels of 4,500, and that's going to continue to be the very critical support, especially going into next year. Our price targets above are getting very close to being met, and they're sitting up there at 47.82 and 48.30. We could still very likely hit those price targets this year because we are going into the Santa Claus rally, which does last this entire week going into the first few days of next year. Now keep in mind, we have not yet had a full-blown stock market correction this year, so it is very likely we are going to have a full-blown stock market correction next year, and I will be doing a lot of updates talking about when to expect that correction. So right now there's not too much else to talk about because we're still well above our critical support level and we're very close to hitting our next price targets. Keep in mind that anytime we hit my price targets, it always increases the probability that we could get a pullback, and a pullback can always turn into a stock market correction. So as I always tell you, reduce your risk as we continue to go higher and continue to get greedy as we pull back to these support levels. Right now, because we're at all-time highs, it's time to start reducing your risk, start raising more cash, and get prepared to buy the next dip. That doesn't mean you get completely out of your long positions and sell everything, because we are still in a bull market. You will always want to hold your long positions as long as we're in a bull market. Jumping over to the NASDAQ 100 NDX index, again, we're looking at the weekly chart here, and we can still see the NDX is in a strong bull trend. Just like the SPX, it's only strengthening, and we're very close to getting back up to new all-time highs, and the next price target will be up there at 16,932. So that's the price target I think we can still hit here in the Santa Claus rally, and obviously we can extend past that and continue to climb higher in this bull market going into next year. The extremely critical support level on the NDX is still down here at 15,653. So as long as we're above that level and we have the bull trend, we will want to hold on to our long positions. So just like the SPX, you can zoom out and see how far we've came this entire year, and you just want to continue to follow this trend. This trend is very strong and there's no guarantee exactly when it's going to end. And as you can constantly see, people continue to call tops and they're continuing to be wrong. Don't bother trying to call a top. That is no benefit to you in your trading plan. If calling a top is a part of your trading plan, you're already destined for doom because it's damn near impossible to call a top. Why bother trying to call a top if it doesn't help you trade better? Just follow the price action, know your entries and exits, and continue to stay bullish in this bull market. Jumping over to the Dow Jones weekly chart, again we can see we're very close to new all-time highs and we are still in the bull trend. The bull trend is strengthening because we're seeing separation in the moving averages and we're still well above critical support, which is right around 35,338. So as long as we see all three indices in bull trends and with bullish price action, we will want to stay bullish because we still could go much higher. Yes, we are probably going to be due for a stock market correction next year, but nobody knows exactly when that correction is going to come. So as I always tell you, just stay objective and follow the price action. We'll know the correction is likely here because we're going to lose a critical support level and then we'll very likely lose the bull trend. But right now it still looks like the Dow Jones wants to continue pushing higher and you can see there's plenty of room within that upper Bollinger Band with the strong bull trend. On the Russell 2000 weekly chart, you can see we're currently still below the 20 simple moving average and we still gone much of nowhere for the whole entire year. We've been chopping around going all the way back since February of this year, and we really only had that one all-time high breakout in November, which was just a false breakout before we came right back down into the trading range. So right now, the Russell 2000 looks like it needs to break back out above 2334 to go back into a bull market, and as you can tell, we don't have the bull trend or a bear trend for that matter in the Russell 2000. So as long as the Russell 2000 is staying above this critical support right around 2150, it could still stay in this trading range. Otherwise, we need to see it breaking down outside of support to go into a bear market or break out outside of resistance to go back into a bull market. Anything else is just a trading range between about 2150 and 2330. Jumping over to the VIX weekly chart, we can see the VIX is still getting crushed back down below 20 and it's currently trading around 18.4. Remember, the VIX below 20 means we're going back into that bull cycle and we're going to continue to see all-time highs. We need to see the VIX breaking out above 20 and closing back above 25 to see that full-blown correction. So right now the VIX does favor the continuation of the bull rally, so expect to see the VIX continuing to get crushed back down towards 15 as long as we can sustain this bull rally and continue to form all-time highs. If at any point the VIX closes back above 25, we're very likely in that full-blown correction and we're going to see that full 10 to 15% correction. Possibly even more than that, but that is a good base of foundation for what to expect during a correction. Jumping over to the Bitcoin weekly chart, we can see that Bitcoin is starting to bounce off of that support level and it was getting very close to the weekly 50 EMA right around 45,000. We're back around 51,500 and the bullish breakout level will be a close back above 53,000. We did lose the bull trend, so there's no reason to expect a very impulsive bull rally here, and it still is possible we form some sort of consolidation wedge before we can break out and go to a new all-time high. So continue to watch that very critical resistance breakout level at 53,000, and if we can start breaking back above 53,000, we will start looking a lot more bullish. We'll still need to get a break and close back above 60,000, and then back above 60,000, we can start talking about brand new all-time highs. Now to the downside, we have critical support at 45,000 and 39,000, and we need to see Bitcoin holding above 39,000 to hold on to the hopes of another bull cycle. If Bitcoin breaks down below 39,000, we're very likely going to see the full-blown bear market, so that will be the most critical support level. On the ARKK ETF, you could see we're still holding around that support level at $90, and we are starting to see a bounce. However, we are still in a very strong bear trend, so there's still the possibility we retest that support level at $90 and possibly break down below it, which means we will see ARKK coming back down to the next level of support right around $85 to $81. However, if ARKK can stay above 90, it's possible to come all the way back up to this resistance level right around $114. And if we can break above 114, ARKK will be looking a lot more bullish. But as you can clearly see, there is a lot of downward momentum in this ETF, so don't be getting overly bullish on it until it can clearly break out and hold above 114. You could be getting a lot more bearish if it breaks down below 90, looking for that next support level right around $85 to $81. So jumping back over to the SPX, keep in mind I am filming this video intraday, so the price action is still moving around, but I did want to deliver the message that this is a macro level bull market, and I don't want you going into next year making the same mistakes you made this year. If you are constantly panic selling at the bottom and FOMOing in at the top this year, I want you to rethink your trading plan and make sure that panic selling is not part of your trading plan. If you don't know your exit strategy, you should never even enter a position, and make sure going into next year, you know exactly how you want to crush this market. There's multiple ways to do it, but obviously you need to stay objective no matter what your strategy is. If you're guessing and just trading based on emotion and following the latest news article, you are never going to have a sustainable trading plan. Make sure it's objective and make sure you know exactly what your entries and exits are, otherwise you really shouldn't just be trading at all. So zoom out, look at the big picture, and understand we're still in a bull market, and next year could be a lot more volatile, but it's still going to be a bull market. It's a bull market until it's not, and nobody knows exactly when the top is going to be. So if somebody is trying to call a top, just unsubscribe from all of that fear mongering and make sure you're staying objective. I've seen so many people try to say that we've been topping out going all the way back to 2 years ago, and we just continue to go higher anyway. Those people have no idea what they're talking about, and they're just causing fear mongering, and eventually they will be correct, but they would have called 10 of the last 1 tops. Don't follow those people because they're just guessing, and there's no objective way to successfully know when the market has topped out. So I'm really looking forward to a great 2022, and I think it's going to be one of the best years yet. On Bank Trade Alerts, we're currently up over 10% in the last 3 months, and there will be some updates coming to Bank Trade Alerts that I'm going to announce very soon. Remember that Bank Trade Alerts is an algorithm-driven trade alert service that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETF TQQQ. If you're looking for a trade alert service that absolutely crushes the market, look no further than Bank Trade Alerts. You can find out more information and how to join Bank Trade Alerts by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade and bring new trade ideas to you weekly. If you're looking to join the Stocks Channel Discord trading community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.